I'll try to set the context. Alternatives have come a long way. I think we started in 2012 when we came up with the regulations, and it's been almost 15 years. And in those 15 years, we have seen a lot of changes in regulations. And today, if you see, we have, raised almost around 5 lakh crore. And also, almost more than 1,500, players that have come in the market. But what is more interesting is that, we have replicated the regulations into GIFT City. And today, GIFT City is one of the, upcoming financial district in India, right? So we'll talk about that along the way. But more importantly, in terms of, not only in terms of managers, but in terms of various strategies, which we have launched in the Indian market. We can't have better panel than this. We have 3 different asset classes, so we can actually, know a lot of them, about the market from each of them. So thank you everyone for coming here. Sure. And let me start with, Nishad, you are in the pre-IPO space, right? And off late, we have seen a lot of, IPO deals coming up, and there is a lot of interest in the market, right? You have been in this space, you have closed 3 funds, and, you have created a niche for yourself. So can you please, tell us about the market landscape and how you see and how you are able to create such a niche for the investors?
So here is the very valid question. The first question, the quantum. We all know how big is the listed market. So if you are asking me how big is the unlisted market, definitely more than 100 times. That much I can tell you. How much big that is slightly difficult to quantify, but definitely more than 100 times. So unlisted can give you more returns because all of you are here to maximize your alpha, so-called. Beta is a secondary. So alpha generation के लिए unlisted segment can give you more returns than the listed segment. For the simple reason being, आपकी entry नीचे होती है. Enter low is the only way you can make money in the fund management. नीचे entry करो, महंगी चीजें आप बेच नहीं सकते हो. Listed में आप नीचे enter मार नहीं सकते हो. Unlisted में आप enter नीचे मार सकते हो. So unlisted you can make more money than the listed. We always say it's a correct statement, but it's a half statement. Unlisted में you can make more money than the listed, provided, next line is very important, provided your fund manager knows how to make an exit. Fund management में unlisted में जो fund management में exit मारा है, they have got the money to their bank account. Otherwise, the returns are only in papers. So wherever you make, since you asked the question about investing into the unlisted, it is a very big landscape. But wherever we are investing, we always take a first bet on the possibility or the probability of exit should be very high. So wherever the exit probability very high, accordingly you should enter. So entry criteria is always depend on the exitable criteria. I always believe the returns come next, because if you exited, the return has to come to your bank account. And what matters most is bank account return, not the paper return.
Well said, Nishad. I think thank you so much for that insight. Moving to another, unlisted space, I think, Piyush, we have been in GIFT City yesterday, and it was a very wonderful session. It's a full packed house. Real estate has been one of the, alternative asset class since the start of the alternatives, right, in 2012. And you have been associated with that particular segment for a quite long time. We understand today that it's one of the, the maximum investment as per the data which is released by SEBI goes into real estate. So can you please help us with the landscape today, what has changed and how it has grown over a period of time? And it would be great if you can touch something on the, GIFT City part as well, because there also, when I went yesterday, I just went after 6 months and I saw so much of, changes in just 6 months. So would like to hear that from you as well.
Thank you. So as real estate market was, if you just give you a data from the beginning, in 2003, Press Note 2, which opened up the real estate game, basically 100% FDI allowed. And from that, the real estate the boom has started. And we have seen the period of low also in 2008-9 when the Lehman collapsed. Unfortunately, the money which had come in the early days, they had very different expectations from investors, private equity fund, which had come in initial days. As the developed country, there are, in 3 years, they used to make a 100-acre project. And that's what the amount of money they invest in, that kind of development they had during developed countries. But same not was the case for India. See, in India, every state has a different bylaws. And that makes it, again, more difficult. And during those days, I still remember, the people were making presentation and making $100 million investment and saying that we'll do it in 3 years and exit and everything, blah, 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 blah. The fact of the matter was that your environment clearance used to take 2 to 3 years. That was the state. And that point of time, buying a land is also a challenging subject, right? Real estate is not that easy, where people see that, hey, land kharid liya, project bana liya, bech diya. Those days were different, where the builder used to put the just bidding, and they used to sell the pre-sale mein pura maal bech dete the, and then they use that same money for other. Fast forward to today's context, if you look at it in last 5-7 years, because of RERA, demonetization, GST, and AIF, which is also a stepping stone for organizing the funding in the real estate space in category 2, basically. So like between 12 years, like 2013 till 2025, AIF has got to register more than 1,500 AIFs in all the three categories. I belong to category 2, which is unlisted in real estate. The data talks about, as it's mentioned, that more than 13 lakh crore has been raised, out of which 500 crore, 13 lakh crore got the commitment, 5 lakh crore is already been raised. And in category 2 alone, 3.5 lakh crore has been deployed. In category 2, the real estate space has seen 75,000 crore. That's what the number is talked about. As you spoke about GIFT City, as we are seeing it, GIFT City was a dream project for our PM, right? But it didn't took off till the time he was in state, and when the moment he moved to central, you see the drastic change has happened. Currently, as we speak as a group also, we have out of 8 million square feet as a 𝐶𝐻 as a developer, which is going on, 4 million square feet alone in the GIFT City our projects are going on.
Wow.
That's the scale which is now GIFT City is witnessing. In next 4-5 years, you have more than 10-15 million square feet of residential commercial development which is coming up. The Leelavati hospital has come, hotels have come, schools, international colleges have set up their shops there. So that's the amount of work is happening in the GIFT City. And the Gujarat as a state, I've been traveled to all the state cities and different projects when I was investing. Gujarat, the master plan is completely different. They have a well-planned infrastructure. They have a roads after road where the connectivity is superb. You can connect one location to different multiple direction you can reach. And now the bullet train, metro train, connecting all that major hub like Bombay, Ahmedabad will be like 2 hours journey when the bullet train starts, and starting from GIFT City till BKC. So that's the growth which we are seeing in overall next 10 years as India is also booming. And real estate contributes to second largest to the GDP, including real estate infrastructure. So as we are talking about in the earlier presentation and panel which spoke about $4 trillion, we are expected to $8 million GDP in next by 2030. That's the growth we are seeing in India, and it's for everybody to take a pie of it.
Thank you, Piyush. I think you well said. I think 10 years too long. The way I see it, I think next 5 years will be way ahead in GIFT City, because I think after 2019, the way the entire ecosystem have picked up is really phenomenal. I mean, I would really urge people to go and see the place, because the way the ecosystem has been built, and in fact, we as 𝐵𝐸, in our company as well, we have a lot of focus in GIFT City. We started in 2023. We launched our first fund, which is our inbound fund, essentially which pulls in money from overseas investors, and we put it into domestic mutual funds. So that was the first fund, and we have seen so much of traction in it, and there are a lot of interest. We are almost onboarded more than 100 investors today. So I would say next 5 years is, I know things will be much more ahead than where we are today.
So,
well, thank you, Piyush. Moving to Pratik, I think Pratik, you specialize in global investments. You have a fund which focuses into global investments. Now, I think this is the right time to ask, because we see a lot of tariff wars going on. There are a lot of uncertainties. So if you can, help us understand what is the global landscape is today, and what are you focusing as an investor in the house in that particular space?
Sure, thanks. I think in global investing, what you have to realize is that, like a lady said before this, that markets work in different cycles, right? That is also true for global markets and global countries. So let's just look at some of the bigger players in the global scenario today. Somebody like a US, which is the biggest player in town. Today we see US entering into an earnings slowdown cycle, right? There has been a lot of pressure on the economy through the Trump tariffs. I don't want to comment on the political side, but let's look at how things will evolve economically. With tariffs, you are likely to see a higher pressure on inflation. There is a risk that inflation will come back. As a result, the central bank of US, that is the Federal Reserve, they are not cutting interest rates as aggressively as some of the other developed central banks like RBI or European Central Bank. So we are entering from a Goldilocks scenario where you are having a high growth and low inflation for the past 2 years to now into a scenario where you are likely to see a risk in inflation or an inflation rise up in the US, and at the same time you are seeing growth coming down, right? So in this kind of a scenario, you're going to see a significant pressure on earnings growth in corporate US in the next 12 to 18 months. Okay, and it's important to note that the time frame is 12 to 18 months for this. Just to add some sense about the numbers, that how was the earnings growth in US, 2024 Q4, S&P 500 earnings growth year on year was 18.6%. Okay, let me just reiterate that 18.6% earnings growth year on year by S&P 500 companies. That is massive. We are not having that kind of earnings growth even in India at this stage, right? And what's happened is that US has likely reached a position where they have peaked. Okay, so like I was mentioning about economic cycles, US is probably where they have peaked already, and now they are starting to come down, right? There were always multiple factors that were there were multiple risks that were arising in the US. They had a high fiscal deficit. Their interest burden was very high, like Mr. Vikas mentioned. But what was also happening, that valuations had stretched a lot, right? And this was a time where you were seeing that valuations had to correct at any sort of bad news. And the trigger, unfortunately, has come from Donald Trump and tariffs. This is, in my opinion, this is noise. Let me remind you that we are celebrating the 3rd anniversary, or we have passed the 3rd anniversary of the Russia-Ukraine war. At that time, people thought, the world will go bust. There will be no oil, commodities will go bust. Nothing of that sort has happened, right? Similarly, you continue to have some or the other disturbance in the Middle East, and people keep asking you, what will be the kind of impact globally or financially? What kind of an impact that happens? None, okay, or very minimal. Because these are kinds of things that the market feels the pain, takes it in its strides, digests it, and then moves on. Okay, so tariffs is something that today we are talking that what will be the kind of event. 2 years down the line, there will be a deal. Maybe, I don't know how long it will take, but 2 to 3 years down the line, we will not even be talking about tariffs. We will be talking about how the US economy has slowed down. So we need to stop thinking about the headlines and we need to start thinking about the fundamentals. Okay, so the fundamentals in US are going to be deteriorating for the next 12 to 18 months, and that is where the country is headed. Quickly, I want to cover 2 other geographies as well. Europe as a continent is seeing the worst. The worst is behind them. Okay, inflation is quite benign in Europe, and as a result, we are seeing interest rate cuts consistently by the European Central Bank in Europe. Secondly, you are seeing a tailwind that German government is doing a heavy fiscal spending. The European nations have always been a fiscally tight policy. They've always run. They've never run a loose fiscal policy like the US. But now with Trump coming in, pulling out of NATO, and realizing that we will not be supporting the rest of the world economically, the world is realizing that we have to fight our own economic battles, right? So Europe has come out with an 800 billion euro program to spend on defense and manufacturing in their own continent. Okay. Additionally, Germany had a clause in their constitution that they could not spend more than 1% of their GDP in defense manufacturing. They have done away with that. Okay, and the idea was very simple, that they wanted to explicitly manufacture and spend more on their defense spending, right? Again, this is going to focus on re-kickstarting their manufacturing activity. And the last tailwind I think that Europe is getting is that we are very close to the war in terms of the Russia-Ukraine crisis that is about to end. And the biggest beneficiary of this development is going to be Europe, in my opinion, because the day there is a ceasefire, you lift sanctions of Russia, and Europe will start getting access to Russia's cheap oil and gas, which was their biggest pain point in 2022, right? So you are seeing a continent or a region that has seen the worst in terms of their economic headwinds. You are seeing policy support coming out from the government. You are seeing monetary policy being supported by the central banks. Everybody is cutting rates in Europe. And that is why you are seeing that Europe as a nation, you are seeing a reallocation of capital from US equities to European equities. The last piece of the puzzle is China. China has still not resolved its domestic issues, but clearly we have seen that Chinese technology companies are able to compete with US technology. Till last year, everybody used to think that US is the only game in town when it comes to technology companies. But the DeepSeek news broke out in January and the world was hit. Right? Everybody from NVIDIA to Google to Microsoft were wondering that how is a small Chinese tech startup able to generate the same level of models at 1/6 the cost of an NVIDIA, right? So if China is able to compete with US, and my sense is that they have to compete because with the kind of president that US has, China knows that they have to build their own technological capabilities to be able to compete in the world, right? So what a global investors are also seeing is that you definitely have a domination of US tech, but you're also getting an alternative of these kinds of companies in China, right? So China tech is also going to be very interesting, and global players are going to look at it. Names like Alibaba, names like Baidu, names like BYD, right? BYD is outselling Tesla massively in Europe. We see a lot of BYDs even in India at this point of time, right? So these are big tech names, the large tech names of China that are also capturing the world's imagination.
Thank you, Pratik. I think that was very detailed and very insightful. Thank you so much. I think we got a very holistic view of a lot of geographies which you spoke, and prominent geographies actually, which are relevant to us. So thank you so much. Let me go a little bit more specific to the funds which you are, offering or managing right now. So Nishad, you have closed 3 funds of your Bharat Delhi fund, right? And you have raised close to 3,000 crores in one single calendar year, I think. Yeah. I think that's a phenomenal achievement. I believe not every day we see. So can you please tell us, about the fund and how you have created that niche, and what are you offering different as compared to, the competitors?
I would not like to touch that competitor part, but rest of the questions I would certainly take. So yeah, 3,500 crore is what we raised in this calendar year, probably the best. So one thing, stick to your basics. That's the mantra that we followed. What are we good at? We have done 114 IPOs, 114 to be precise, IPOs in last 10 years and 9 months. So we know how to do the IPOs. And the opening question you asked me, I talked about exit. Because unlisted, the exit is most. So our mantra is very simple. Invest in those companies which are IPOable in 2 to 3 years time. We are not here to take a big bet. Why? Because simple. If you want a clear exit, invest in one government. Even before the government changes, you exit that. Because new government ka stand kya hoga, sitting over here, slightly difficult for the fund managers to take that call. So don't take a big bet. Invest in those companies which are IPOable in 2 to 3 years time. Now, how do we identify? In a very simple word. What are we doing? Who are the people basically who subscribe at the IPO? Mutual fund, insurance and banks. Unlisted, they cannot enter. If you feel that the mutual fund industry and the insurance and bank, their AUM is going to come down, no, it's not going to happen. And this has been answered. 25,000 crore in February per month, mutual fund got the AUM. It has gone up in spite of market going down. So mutual fund, whatever they exactly buy on the date of IPO, if you try to do the same thing, buy same thing in the unlisted, the exit becomes easy. So we take a bet more on the, for example, the money that we have invested till today. Very easily, I'll give you the 3 or 4 parameters that we have used for entry. You will only decide whether exit is feasible or not. 97% money invested by us till today are into the asset-backed companies. 93% of the invested invested by us till today are into the PAT positive company. Slightly unheard. The PAT is slightly unheard in unlisted segment, but the 92% invested in the PAT positive, and 97% money invested by us till today is into the growth. We have never done secondary. Only 3% secondary. Promoter के हाथ में पैसा नहीं दिया, company के अंदर पैसा डाला. And most of our catchment area is tier 2. Rather than going to tier 1 and tier 3. So tier 2 is more catchment area. So this kind of a companies where you definitely can establish the 𝐭. Plus, promoter substantial shareholding is very important, because ultimately you're putting a bet on the promoter. His substantial shareholding, his second generation is into the business, are very important criteria while selecting. Now you only decide. If you bring something like this to the big investors, sorry to use the word, they have no option but to buy you. So that is why we exactly invested. We know what is getting sold on the day of IPO. Same thing you buy 2 or 3 years before that, exit becomes relatively easy. So that is the mantra we have followed. Series 1, Series 2, Series 3, the mantra has not changed.
Okay, understood. You touched upon two things actually, which, one, the J curve, if you can elaborate what exactly is, I think, for the audience. And
So J curve is very important, like a J word. So when you invest in some company, the promoter is traditionally doing, see, these are the mid-sized manufacturing company where they may or may not have the very good CFO or a CT or a CMO. So promoter is doing a good business, but as per his own traditional way. So at times you have to tell him, okay, these are the loss-making areas, per unit metrics, remove them. So for initially say 2, 3, 4, 5, 6 months, they slightly come down in the revenue because they are removing the unwanted area, and then they go up very fast. So exactly the word J you write, capital J, that's called J curve. Slightly you have to at times 4 months, 5 months, you have to at times take a hit, but then ultimately if you remove those unwanted elements, there is no option but to go up. That's called J curve.
okay, thank you, Nishad. I'll move to, Piyush, I think you also have a very unique offering, investing in, early stage of the real estate investment, right? Where you invest in land and then pre-project, where you are focused about. You have recently undertaken your first closing, right? If I'm not mistaken.
Yes.
So can you tell us about the journey and, you are close to GIFT City, Ahmedabad, and how you're, attracting investors to this particular space? A little bit more about what are the returns, you are, targeting for this particular fund, and few features of the fund, maybe that'll be really helpful.
Sure. So before that, I just would like to, for our audience to understand where I come from, Ahmedabad. Ahmedabad, the developer which we belong to, the represent is Shivalik Group. In last 26 years, the group has delivered more than 10 million square feet in Gujarat micro market, mostly in Ahmedabad. As we speak, in my earlier talk I talked about is that we have ongoing project currently is 8+ million square feet which are ongoing as we speak, and 4 million square feet alone in the GIFT City. As a group, the promoters are very innovative and differentiated in terms of the rest of the developer which is there in India, I would say, because I work most of the developer, and the way they are looking at the real estate is that entire ecosystem. So we are the first in Gujarat to start the real estate institutes. We have more than 800 learners passed from the real estate institute where they become developer, sales broker, land acquisition guy, and all that stuff. So we learn a journey to real estate course in that institute. We are also the first to start the furniture business. So for that, we wanted to learn how the furniture business works. So we had taken a Stanley franchisee which got listed last year. So Gujarat Master Franchisee, we have Gujarat Master Franchisee, and now proud to say that we have set up within 1 year more than a 50 crore investment in the furniture manufacturing factory, where the next we are seeing that the commercial property buyer or residential buyer, the time which they takes once they get the position for building for furnitures and all that, now the time they don't have. So they also need something which is predefined, pre-designed, and that vertical will play a very huge role to enable what we are doing and provide better quality. So that was the third. Second and third, we are also the first Gujarat developer-backed fund was launched. So Gujarat traditionally was looked upon where GDP is also equal to the other GDP. Okay, when I say that, I'm sure you guys understand how the Gujarat function, and that was the space where Gujarat was operating majority in terms of. So the transparency for the global investor was always a challenge. And now over a period of time, because of state and central, as the last year in the budget, long-term capital gain tax, which has reduced to 12.5%, and from 3 years it's reduced to 2 years, has enabled the land owners to accept full check transaction. And that's also an enabler to the growth factor which is there. As a fund, we are the first fund in Gujarat, and we have 150 crore fund. We did our first closure in the month of September. And idea was that we were also getting an opportunity to deploy it. So as per SEBI, like you have to do first close so that simultaneously you can raise and deploy. And the fund as a strategy we are looking at to invest in the project, which gets complete in 3 to 4 years. As we have a very good legacy in the market, the developers, I'm sure everybody would agree in the cities also, they need funding at the land stage, okay, and they need support for selling.
Yeah, but it's actually coming to that because most of the people are focused in that particular segment because the money you get it.
Yes, so there are a lot of, let's say, NBFC which has allowed like banks are not allowed to land at the land stage, but NBFC in the funds which are there. But what makes us unique in terms of differentiating also is that we are also as a developer, and also we are investing in the project which is third-party developer in Ahmedabad market, where the landowner has a very good, or a developer has a very good location, but he does not have a brand. He is not reputed, right? So the market prices, for example, is 5,000 rupees. He will sell it 10, 15%, 20% cheaper than what the current market price because he does not have a brand. So that's what we bring as a solution. And that's how we are creating an alpha on our portfolio. We have invested 3 projects we have committed in Ahmedabad. So what we do is that we give money to the developer at the land stage for approval or land acquisition. And also as an independent service, we provide to that developer is a planning, design, marketing and sales. The biggest challenge, as I spoke about, is that selling. Earlier, like you would put up a hoarding and then customer will walk into and buy apartment and commercial offices and all that. But now that those days have gone, now you have to be, the customers are more educated. They understand how the developer is, what quality he is offering, what is his past performance. There are a lot of forums available in the platform where customers are now more agile to where he wants to put his money. And biggest thing which I'm seeing as an alternate asset class as we are looking at is that the investor, the customer who wants to invest in the real estate asset class where they want to enjoy the return. But when they invest in real estate asset class in a direct exposure, okay, they has to do that. Who's the developer? What is the location? What is the product mix? Whether residential, commercial. And the biggest thing, as Nishant also spoke about, the exit is the most important thing in any of the where investor, how they get an exit.
It was supposed to be a question. So plan your exit.
Yes. So here, when the individual property, when the investors are buying or customers buying, where they want to get an exit, the horizon remains the same as AIF as a category or alternate as a category is an illiquid asset class, right? And that's what is also the beauty about that, because it brings the stability and also have that kind of a return. So that's what makes it unique in terms of fund, where like 1 crore is the minimum ticket size in AIF, right?
Correct.
As per that. How many of you, if you can answer me, like 1 crore में कहाँ अच्छा property मिलेगा? In Pune में कोई अच्छा 1 crore में property मिलेगा? Right? नहीं मिलेगा. But that's what bring the AIF as like 1 crore, you get a diversification also. That 1 crore invested in the AIF, okay, diversified minimum 4 to 5 asset class. And when the customer or investors are buying for a return and when they invest in the property, the exit becomes very important and very difficult, because when you want to go and liquidate that asset, it becomes challenging. But as a fund manager, we look at first thing is that how I'm going to get an exit. So I have an exit plan ready before I invest in the project. And that makes it unique for investors to get that delta return. And as we enter at the land stage, okay, so generally the customers buy or investor buy in the project where the pre-launch and launch stage happen. But AIF is allowed to at the land stage. So we enter at that stage. And when the investor buy or customer buy, they are the developer selling the property, adding the profit to the customer and investor when they sell. And in our case, we enter into the land and we have become partner profit in that, where they share the profit with us. So cycles reverse. And that's what is makes it unique in terms of what we are doing it and how we are doing it.
Wow, great to know. I think that's a very unique, concept which you have come up with. Good luck with your with your fund. Pratik, I think you have a GIFT City fund, right? Which is a global multi-allocation fund.
Yeah.
So can you tell us more about the fund? What is it about and how you are allocating your money through GIFT City?
Sure. So we at Neo are running a global AIF housed out of GIFT City. The idea is to run a multi-asset, truly global fund. And by global, I mean that we will have allocation to US, Europe, China, Japan, right? As well as emerging countries like Korea and Taiwan. The idea behind creating a global fund is that investors diversify away from India. Our true belief is that every HNI and UHNI will want to have at least a 10% exposure to global markets as a part of their overall portfolio, right? The needs might come from sponsoring kids' education in the future, buying a property abroad, or expanding your business operations to global geographies. But there is a definite need from HNI investors to sort of create a global corpus or to create dollar assets for themselves. And the idea is to, for them, is to, from our side, is to give them a truly global portfolio, a completely diversified portfolio. We will go into places where nobody has heard of. We can buy Taiwan's biggest chip manufacturing company called TSMC, whose biggest client is NVIDIA. So everybody knows NVIDIA and the AI theme, but the manufacturing of NVIDIA chips happens in Taiwan, right? And as you are probably aware, Taiwan is the biggest semiconductor manufacturing country in the whole world, right? So these are structural themes that are playing out globally. It is not that, you have lot of technological innovation happening in the US. You cannot beat that anywhere. So there you have to have a US-centric exposure. But at the same time, you have to realize that there will be pockets of value in China, in Japan, and in certain parts of Europe as well, right? And the idea is to give exposure, to give clients a very diversified exposure across global equities, as well as add into the mix commodities like gold, silver, and copper. Gold has been doing phenomenally in the current year. Today we are talking that gold is close to reaching $1 lakh. I have had gold in my portfolios or in my sites when gold was international price $2,200 per ounce. Today it is trending at $3,300. So it's a 50% rise in international markets. The idea is to build a robust portfolio, and once you build a diversified, robust portfolio, then you are relatively insulated from these kinds of shocks, and you are able to generate strong dollar returns for your clients.
Thank you, Pratik. I think next time I should get in touch with you so that I also make money. So, I mean, you rightly said global allocation is very important. In fact, we have recently, at _, we have recently launched a global allocation fund, and that too from GIFT City. But it is slightly different than what you have launched. We have essentially, our main investment objective is for, domestic investors who don't have many avenues to invest globally. Today, if you see, the mutual funds limits are already hit. So GIFT City gives you a very, unique platform where you can, invest globally. So the fund which we have launched essentially is more targeted towards equity and offshore funds mostly, and ETFs. And as you rightly said, you can't ignore US today, because historically US has given around 14 to 15% in the last 15 years. If you talk about India returns, it will be around 7 to 8% in terms of dollars. So there are some value which you can create when you go global in terms of diversification also. You get the benefit of currency depreciation as well. And more importantly, you get an exposure to certain themes which are not available in India. Like as part of our portfolio strategy, what we have done is we have tried to give investors a particular, avenue by which they can take exposure in certain themes which are not available in India, or which are at a very nascent stage. For example, AI or semiconductor or blockchain. So these are technologies which are currently, widely accepted globally. So these are going to be the next future technologies, right? Today, if we want to invest that in India, there are very few companies which have started, or there are startups who are into the AI space. So you don't get that exposure today in India. So to get that exposure, I think you can go global and have a global allocation where you can get exposure to these themes and, emerging markets and developed markets. So thank you so much, Pratik.
Just like to add one single comment before we close. Thursday, we had Google's parent Alphabet coming out with earnings. I just want to share how big this market is. Google's revenue for the quarter was $90 billion, and they had a PAT of $34 billion. Okay, so we are talking about companies that are trending at margins of 35 to 40% and growing constantly, right? Yes, there might be issues in the US today with tariffs and inflation, but long-term US tech or AI or Bitcoin or blockchain or these kinds of big themes, they are going to run out a very long way, and that is what we are going to bank on.
Yeah, thank you, Pratik. And I think for all these funds, like the fund which you have and the fund which we have, people, can invest through the LRS route and the, OPI route. I mean, that's one, benefit which they have. Instead of, getting restricted through the MF route, you can actually utilize the $250,000 through the GIFT route and you can invest globally. So thank you, Pratik. I think we are at the fag end of our, session. So I'll just, would like to wind up with one single question for all of you, because these are unique asset classes, and a lot of investors are getting awareness about this particular product. So what should investors avoid when they explore your products, and what they should look at when they come to invest in such asset classes which are very unique in itself?
So investors are very smart nowadays. Most of the investors, whenever they invest, they do listen to fund manager's presentation. Fund manager का presentation 7 या 8 slide का होता है. But I always say the most lucrative slide for you is past performance. Past performance मतलब rear view में देख के गाड़ी चलाने जैसे है. That does not guarantee the future return. Investment objective and the investment strategy of the fund manager is very, 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 very important. Past performance under previous circumstances में आपको prevail किया. That does not guarantee you कि past performance future में आएगा. But if the investment strategy is in alignment with the future growth, the results are there. So past performance has to be looked into, but do not consider that as the only criteria. There are things beyond that. I again repeat, investment objective and investment strategy is equally important as compared to the past performances.
Pratik, thank you, Rishad.
If clients are looking to build a global allocation, you should think about global allocation as you think about your India allocation, that you need to build out a diversified exposure. Okay, in India, you don't look at, okay, let's just buy HDFC and put all our exposure in a single stock. So the idea is you build a robust, diversified portfolio, and that is the way investors should be thinking about taking exposure to global markets as well.
Thank you.
I'm the last to answer. Everything is covered. No, but I would like to say that risk which is there, and for performance, fund manager performance is important, but also as an investor, you should also be patient about your capital investment. I think that's what is also important. Sometimes the panics will come, the situation will come where the market is down and all that stuff which are there. But as you rightly mentioned, by objective of investment, diversification and all that important, what your fund manager has invested, be patient on that certain time period which is there, because the cycle is always like that. There will be a dip and there will be up, right? So, but if you stick to the performance on the fund manager's strategy, I'm sure they are your doctors to generate better return, and that's what I sum it up from the last.
Thank you so much, Piyush. I think from my side, with what I'd like to summarize what you guys said. See, markets are always, uncertain. There is always volatility. But if you see when we were in, 2020 and where we are today, you will see that market has come up almost more than 15-20%, right? So that's the kind of return which we have made. Now, why, this period? One thing you can look at, this is the period where we had some of the major events in, in our times. The COVID-19 to start with, then you had the Russia-Ukraine war, then you had rising oil prices. Recently, we had our elections and also the elections in US. So there has been major events that have happened during this period. But the point is, if you choose the right investment manager, if you invest for a longer period of time, I think markets have rewarded, and that's what I will leave with you. So these gentlemen are here, all are unique offerings, including me. If you have any questions, please feel free to drop an email or, talk to us. We'll be very happy to, help. Thank you.